Tax reform, a shift in the income tax landscape. The European Union has announced a significant overhaul of its tax policies, aiming to simplify the tax code and reduce the tax burden on individuals. The proposed changes will have a substantial impact on the income tax landscape, particularly for individuals. Key provisions of the tax reform. The tax reform proposes to increase the tax-free income threshold for individuals from €19,500 to €20,500. This means that individuals will be able to earn up to €20,500 without paying income tax. The tax reform also aims to transfer the highest tax rate of 35% to taxable income above €80,000. Impact on taxpayers. The proposed tax reform will have a significant impact on taxpayers, particularly those who earn above €80,000. The transfer of the highest tax rate to taxable income above €80,000 will result in a substantial increase in tax liability for these individuals. The tax reform will affect approximately 1.5 million taxpayers in the EU, with the majority being high-income earners. The increased tax-free income threshold will benefit low- and middle-income earners, who will be able to keep more of their hard-earned money. The transfer of the highest tax rate will also lead to a reduction in the tax-free allowance for low- and middle-income earners. Benefits of the tax reform. The proposed tax reform is expected to have several benefits, including simplification of the tax code. The tax reform aims to simplify the tax code by reducing the number of tax brackets and rates. The impact of taxation on employees. The impact of taxation on employees can be seen in various aspects of their lives. Here are some key points to consider. Tax burden. The tax burden on employees can be significant, with the average salary of €28,356 resulting in a tax bill of Euro tax-free allowances. Single parents, for example, do not pay taxes on their earnings, as they are exempt from taxation. Tax credits. Some employers offer tax credits to their employees, which can help reduce the tax burden. This means that companies can keep more of their profits and reinvest them in the tax-efficient way. The new tax break for companies. The new tax break for companies is a significant development in the world of corporate taxation. It is designed to encourage companies to reinvest their profits rather than distributing them as dividends to shareholders. How the tax break works. The tax break is based on the idea that companies are more efficient at reinvesting their profits than individuals. By allowing companies to retain profits without being taxed, the government aims to encourage companies to invest in growth and development. The tax rate for companies recording profits is reduced to 5%, down from the current 17%. Companies that do not distribute dividends and retain profits for reinvestment will not be taxed. Benefits for companies. The tax break can have several benefits for companies. These include increased competitiveness. By retaining profits, companies can invest in growth and development, making them more competitive in the market. Improved efficiency. Companies can focus on their core business and avoid the costs associated with distributing dividends. Increased profitability. By reinvesting profits, companies can increase their profitability and achieve long-term growth. Examples of companies that can benefit. Examples of companies that can benefit. Several companies can benefit from the new tax break. For example, a technology company that invests in research and development can retain its profits and reinvest them in the business. The Cyprus tax reform, a game changer for the government. The Cyprus tax reform has been a topic of discussion for several months, with various stakeholders engaging in talks to finalize the details of the reform. The reform is a key initiative of President Christodoulides, aimed at modernizing the country's tax system and making it more competitive with other European countries. Key objectives of the reform: improve the tax system's efficiency and effectiveness, increase tax revenue for the government, enhance the country's competitiveness in the European market, reduce the tax burden on businesses and individuals. The reform is expected to have a significant impact on the Cypriot economy, with the government aiming to increase tax revenue by 10% and reduce the tax burden on businesses and individuals. The role of the Minister of Finance Makis Karavnos, the Minister of Finance, has been instrumental in the reform process. He has been working closely with the President and other stakeholders to ensure that the reform is implemented in a systematic and incremental manner. The significance of the event. The recent talks between the Minister of Finance and the President have highlighted the significance of the event. The reform is seen as a game-changer for the government, with the Minister of Finance emphasizing that it represents the third installment in a series of talks about the upcoming tax reform. The President's governance agenda. President Christodoulides' key initiative is part of a broader governance agenda aimed at modernizing the country's institutions and improving its competitiveness.